Hey, what's up, YouTube family? Thanks for following. I was out this week actually at my brother's wedding in Brazil, and that was a phenomenal time. And it's now back to getting to work. Love to hear from you to see if you have any questions. I'm going to be sharing a presentation today about what's going on in the real estate market, in the market in general. There's so much activity that's happening right now, including what's going on today, where we're seeing oil prices spike 10%. How is that going to impact the real estate market more than you possibly could imagine? Hey, thanks for watching, guys. Give me a thumbs up if you can hear me. Love to hear from you and answer any of your questions. Appreciate the loyal following I've built over these last few months. I'm going to go ahead and share my screen now and see if I can get that working. So let's see, live Q&A. Here we go. You guys see my screen here? Just want to make sure you can see it and you can see me. Yes, thumbs up. All right, awesome. Cece, thanks for watching. So, we've seen crude oil prices go up 10%, and this is a big move, obviously, with what we're seeing over in Iran and the Strait there. This is going to impact CPI. One thing you need to know about oil prices is that it does impact CPI inflation, which the Federal Reserve does use to calculate and make their decisions on rate hikes or rate cuts. And every 10% increase in oil prices generally leads to an increase of 0.3 to 0.4% in CPI. And that could be a detriment to down the line for those of you who expect to see 2 to 3 rate cuts this year. This, if it stays elevated for an extended period of time, will show up in the CPI numbers, and you're already seeing it at the tank, and that's a huge issue. So this is definitely something to keep an eye on moving forward. And, we're going to be watching this on a day-to-day basis to see how it shows up in the inflation numbers moving forward. But this is definitely not a good signal for the real estate market. And of course, the 10-year Treasury has been bouncing around. It went all the way down to 3.9% due to some weak employment numbers that came out. And then it popped right back up to, 4.19 at one point, and then it dropped back down to 4.12. That was earlier today. So the 10-year Treasury is moving back and forth as people are placing their bets on what's going to happen with the inflation numbers. And of course, mortgage interest rates were briefly below 6%, which caused a little bump of demand, especially locally. We saw a little jump. Buyers on the sidelines are waiting for an opportunity to get a reduced price and reduced interest rates so they can afford the properties that they want to buy. And this is one of the signals that, unfortunately is going the other way for housing right now at the moment due to these inflation expectations. And the other side of it, too, is if people lose their jobs, they can't buy a house. And this, seems common sense. But just because rates are dropping does not mean that that's necessarily a good thing for housing, because it also means that, there's economic uncertainty. And if people aren't feeling comfortable with their jobs, they're not going to go out there and make their largest financial investment that they have. So it's pretty interesting. When you put it all together, it's ultimately a net negative. So here you can see, job losses are starting to, accelerate. Trump came into office and you say he's going to bring back all this manufacturing. We just haven't seen it yet. And again, this is not political. This is not the purpose of this. It's economic. But the president is very active in talking about the housing market, where he's trying to find a balance of keeping prices high, but still letting the next generation be able to actually afford and buy a home, which, is talking out as two sides of his mouth. But the reality is that we just got this surprise report today. The U.S. economy lost 92,000 jobs in February, which is actually quite a high number of jobs to be lost. And you can see the prior months, too, were tons of revisions downward. And so we have this narrative that we have the greatest economy that's ever seen. Don't look at the Epstein files because the Dow is at 50,000, right? And it's totally ridiculous. This is just a distraction from what's going on there. But ultimately, the job numbers are not good. Obviously, most Americans are against going into a war at this point in the market cycle and paying for one. And so, there's a lot of significant concerns on the employment front, as well as on the inflation front moving forward. And that's going to put the Fed in a very hard spot moving forward. This card comes from Charlie Bill Ello, and it said the U.S. lost an average of 1,000 jobs per month over the last 6 months. It's the fourth of the last 5 months. This is on a rolling 6-month average. Okay. It's just a good way to look at it, because you don't want to look at it from month to month necessarily. You kind of want to look at some trend lines here. It just smooths it out and makes it more clear of what the direction is. And obviously you're looking at this direction. It's not looking good. This is the 12th time we've seen this much weakness in the jobs market since 1950. In the 11 previous times the US economy was in a recession, and we are not in a technical recession right now, but for the middle class, it certainly feels like we are. And it sucks to say this, but a lot of people who are in my age group, I'm 34 years old, they feel like they can't even have kids anymore. I'm talking to a lot of people who are opting out. They say it's really expensive. It's really challenging. It's lifestyle inconvenience and all this stuff. And this is going to have consequences for real estate down the line in 20 to 30 years if we don't have the immigration to the country that we had before. And so it's something important to track. We're also tracking that alongside the silver tsunami, which is the wave of the 48 million baby boomers who will be passing away over the next decade, sadly. And when you put it all together, you're going to ask yourself, who is going to be the next buyer in the next 20 to 30 years from now? Who is going to be moving into these houses and paying these type of prices for housing? And I think, at the bottom of this is we've been pitched this kind of American dream where you're going to go to a college and get a degree, and then you're going to go buy a house. Well, we just found out that the degrees were a bunch of BS. And, most of them are not worth the paper they're written on and the amount that people spend. And it doesn't actually increase, these jobs simply aren't there. And there probably will be more disruption even with AI coming down the pipeline. But ultimately, the job market is getting distorted. And then we're starting to see one second here, my dog's going a little bit crazy in the background. We're starting to see that, these folks are not, basically they're getting lied to about the value of their degree. But then also on the housing side, why do we need so many people to buy houses when it's so much cheaper to rent? And I know that's like a very controversial thing, but at the end of the day, shelter is shelter. It's supposed to be a place. It's a box that you put a mattress down and you lay your head and enjoy your time and raise your family. But that does not mean you have to purchase the house. It's completely different in other cultures across the world here, where we have this American dream where hey, go get the degree, go get the house. And the house situation now, because of the finances, don't make sense, just like the degrees. You have to run the numbers to see if it actually makes sense to purchase a house, just like if it makes sense to go get that degree for college. And you can see now the unemployment is rising. So under 25 employment rate, 9.3%. That's very high. You have the 25 to 54 unemployment rate. You're at 3.9%. That's low. And the 55 plus unemployment rate is 3.3. So while these numbers are low, they are moving up. But most of the concern is around the under 25 rate. Well, where's these first-time home buyers going to come from? You all have seen those charts where, the first-time home buyer is now 41 years old, according to the National Association of Realtors. That is absolutely true in our experience in Florida. And we're actually seeing, the repeat buyers, they're basically 55, 60, 65 years old. And they basically bought a house 20 years ago. They have a ton of equity. They're selling that house and then buying another house because they have the equity build. They're getting frustrated too, because the numbers don't make sense for them to give up their old house to move into the next one. That's how we're starting to see the lock-in effect really slow down sales, because the math just does not make sense for the generation to be able to purchase at this point in time. So this older group of the 55 plus are feeling the same pain of the under 25. It's basically just an affordability problem. We need to see the prices come down so the next generation can come in. I know the administration is very focused on keeping prices high for as long as possible, but I just don't think they're going to be able to hang on to it over the next few years. There's too many headwinds that are out there pushing it down. And one of the things that we're seeing is that this is the lock-in effect is slowly easing. The U.S. new listings by month. So new listings are coming back on the market at a higher and higher rate every single year since, the 2020 to 2022 timeframe. And it's moving forward a lot faster than we thought, because a lot of people, what happened is in November, December, they were rage quitting. So people would try to list their house, get the price that they want. They would get no activity on their house or very little. They'd get upset, fire their realtor, and then try to relist it during busy season. Well, busy season started, 2 to 3 weeks ago. People just aren't seeing it. And so they're listing their house at, similar prices, but sometimes even lower than when they originally listed it at. And they're hoping and praying that they can get a buyer so they can move where they actually want to go. But the reality is that these listings are coming back on market, and we have a pent-up supply of existing home inventory that often here in the Sun Belt has to compete against new construction, and new construction is providing massive incentives. So it's one of those things where these sellers are in a rock and a hard spot. if you need help, you're in Florida, you're in Georgia, we've got the best of the best agents across the country. If you need help, reach out, send me an email, and I'll get back to you. And if you're not in Florida or Georgia, you can reach out to me too, and I can connect you with one of the top agents. There's about 80% of the agents do not produce enough to be at a professional level. So you need to really evaluate the real estate agents that you work with and make sure that you're getting one that's a top producing one that really knows the market, really knows how to negotiate, really knows how to make sure that you get what you need. So if you need that, definitely reach out. I'm happy to put you in touch with somebody. But here's an example of how it might make sense to just rent. And it's terrifying to say this, because, I am a real estate brokerage owner. However, if you're buying a $375,000 house, you can rent that in Jacksonville for $2,150. Now, the monthly payment on that, including the taxes and insurance, is $2,950. That doesn't include all the repairs, all the maintenance, the HOA fees, all these other fees that it costs to live in the house that do add up. But ultimately, it's an $800 difference. So I run the numbers across the board. In some cases, you can save $1,500, $2,000 a month by just renting the same identical house or similar type of house than it costs to buy. And what the Wall Street Journal is reporting right now is that people are using that surplus money from renting and putting it into stocks. And that's the way that they are going into the future versus betting on housing. They're betting on stocks. And I think that's smart at this point in the market cycle to start to think like that and do that arbitrage. Because again, shelter is just a place for you to lay your head. Obviously, if you have kids and family, that might be a little bit different the way that you think about it, and every individual circumstance is unique. But renting gives you a lot of mobility too. If you can lock in like a 3-year lease, you can negotiate really well. You can have an optionality in there to go ahead and break the lease if you need to, if you need to move for your job or something like that. There's a lot of ways to do that. Now, on this right side of this screen, you can see all of these dots are active listings. We had a ton of active listings going into the end of the year, and then about 22% of them delisted. They literally got upset and took their listing off the market, relisted. Well, here's the issue on the rent side now. A lot of them who relisted it, they're also relisting them for rent because they can't get the price that they want. So now they're saying, I can't sell it for the price I want. Let me rent it for the price. Well, now we have a surplus of single family homes coming on the market for rent. These are the accidental landlords is what we call them. And it's showing up in a big way. So it's an absolute problem that is going to be a good thing for the next generation, because if you're a buyer or a renter, you now have the power. I'm going to show you an example at the end of this video of somebody who used that to save $1,000 a month on their rent. And so I love hearing those success stories. If you have a success story, I'd love to hear it. Drop in the comments below. I'm going to answer all the comments. If you have questions, feel free to go ahead and drop them below. I'm going to answer all the questions at the end of this video that you have about the market and what's going on. But we're still being pitched this housing narrative that there is a shortage of housing. And this has been pushed for a very, very long time. Obviously, there's regional difference between what's happening in the Northeast and happening in the South and the Sun Belt. The Northeast has these NIMBY rules, not in my backyard. Hey, I don't want to build. They're not doing the construction. It's very expensive. And that's how they're able to keep the prices high. Well, there's also issues. They have aging inventory. Young people are moving out of the Northeast and moving into, the Midwest or the South to try to find affordability. Yeah, the regional differences are crazy, CC. It's not even the same market. It's almost like we should just chop it up into 5 or 6 different quadrants and talk about them individually. That's why I think those housing forecasts that are national are just a bunch of BS, because it really doesn't give you a good idea of what's going on in your specific market if you look at the national numbers. But the majority of consumers don't know the difference. And that's a huge problem. But there's a shortage of affordable homes in the Northeast, but the Northeast is changing very rapidly and they have their unique issues. But down in the South, we have a glut of supply, especially of condos, especially of townhomes, which are usually the ones that get hurt the hardest during this time period. JP Morgan came out with a great report showing that the shortage, they believe, has been overemphasized in their language, and that it's only 1.2 million properties that are, short, and they're in specific geographic areas. They're not in other areas that actually have more supply. So keep that in mind. Every area is very micro when you're analyzing them. I'm in Florida. The markets that I know are Florida and Georgia, but I talk to top realtors and top investors across the country, and I learn what's going on in their market. And these are people who are on the ground operators. This isn't somebody who's in an ivory tower who is making up content for the internet to make money. So I think that's a very big difference. When you look at some of these news sources on housing, they are sponsored by title companies, builders, lenders, all of these people who are very interested in seeing more sales occur. And so they have to constantly do pump pieces like this to say, hey, we have a shortage. You need to go buy before we're going to run out of houses, right? This idea. Meanwhile, we have like net migration out of the United States, net immigration out of the United States. Florida's net migration is down 93% since the peak, and immigration to Florida is down 70%. Those are the big reasons why Florida is suffering the most. And we're actually seeing people now relocate back to where they came from after coming to Florida because they either experienced some sort of job loss, return to office, and it's a big problem. I think short home builders, I don't like shorting things because you just never know what's going to happen. I am a long on the equity market, but I do buy protection. But I think your timing has to be extremely right for shorts to work, and that's why market timing is extremely difficult. You have to be right on the magnitude, the direction, and the timing, and it's really hard to get all three of those right, Chris. I think it's an interesting concept to short builders. But their product that they're coming out with, the build to rent product, is fantastic. And I think that is going to give them better margins. They can build entire communities for rent, get one mortgage across the entire community, slap one property manager on the entire community, and get the economies of scale. So I think they're getting creative in the solutions and their economies of scale to be able to solve that type of problem. But just don't buy these narratives. So, right. So we have, on one point, we have here, let's move back here, 4 million homes short. And then the next slide we have, well, there's 44% more home sellers than buyers, and the gap is widening, right? Which is like hilarious. And then on the other side of it, new houses for sale by stage of construction, we're already at great financial crisis levels for the number of, new homes that are available. So like this housing shortage that is being pitched is just not true, especially not in the Sun Belt. We're actually overbuilt because of the speculation from the builders in the net migration. I think the builders just thought this net migration would just continue at the level that it was, and it just didn't. It just did not keep up with what was going on. So, hey, I got 63 people watching. This is awesome. This is my second live I've ever done here on YouTube. If you like this, give me a thumbs up, drop a comment below. I appreciate you guys coming on and supporting the channel. So give me a thumbs up if you like the content here. So, but yeah, the truth is that this data is just, these narratives are just not true. Where the builders were able to build, like in areas like Austin, Raleigh, Nashville, Jacksonville, where I'm at, Orlando, Charlotte, that is where you're seeing the rents come down. Okay. In the areas that you weren't able to build, right? New York, Boston, San Diego, these are where rents are staying up. So this is just the supply and demand story. If you make it difficult to build supply and you just keep population the same or increase it over time, obviously prices will go up. If you have unlimited ability to build, then prices will come down if the demand starts to fall because you're not getting that migration. So this is a really great chart that I think is really effective in showing that trend. And you can see it's just rents versus permits across metro area. That really gives you an idea of what the regional differences are of what's going on. In regards to the rage quitting that we discussed earlier, this is the share of homes relisted in January that were listed below the original list price. You can see that we're at the highest level. So people are starting to slash their prices. They're starting to get realistic on what's going on. And buyers are being more careful. They're saying, screw it, I'll just rent. I'll wait another year. And so we're seeing record low demand numbers. I mean, we're talking about all the way, like demand all the way back to 1995 levels. And the mortgage applications just are going up and down depending on what's going on, but people are getting their mortgage applications. So I don't like that as an indicator. They see the number of what it would cost and they're like, I'll just rent. So, that's why I don't like that as a leading indicator. I like pending sales. And then you have the pending sales minus the number of cancellations. We're seeing record number of cancellations. And then you see the record low number of closed sales for existing homes. I think new home construction can compete a lot better because they can do the rate buy downs. But you're buying the property at just like a really high price, usually in a non-prime area for those new constructions. So you need to be really careful and know how to negotiate. I think you can negotiate like crazy. We've seen agents locally negotiate $100,000, $200,000 off of new construction already, and the market hasn't really slid. And I'm bringing up, if you saw the headline, it was like oil could crack the housing market. Well, if we have a decline in the stock market, it is connected. The stock market is basically a gauge for, how we're feeling about the economy for that day. If we feel like the economy is not doing well, there's job loss, there's other issues going on in the economy. People are not going to go out and buy their largest asset at that point in time. So it's all connected. And especially here in Florida, because people use their 401k money, they use, if they see their portfolios down 5, 10, 20%, they're less likely to go out and purchase a house than if it's up 10, 15%, for example. So it's something you really want to keep an eye on. So here's the questions I got from the audience, and then I'll go through the chat. So go ahead and drop any questions that you have in the chat, and I'll get to them. Why are rents going up when vacancy is going higher? So I had this great text message from somebody in Georgia who was saying, hey, I don't understand why rents are going up and vacancy is going higher. Well, we looked at the property and we noticed that it's like on year 3, it was built, and they're doing the lease up. It's like not getting leased up as much. You need, for underwriters of the bank on properties, when you're trying to refinance your property as an owner or you're trying to exit, you need to show that your rents are up to market rent or higher in order to show the velocity going up so you can really pitch it for your exit. And so that's actually one of the reasons people do this. You're like, this doesn't make sense. Why are they raising the rents? They just need 3 or 4 people to buy in at that new rent, or rent at that new rent in order to exit their property. So I thought that was a really interesting question. That's generally what's happening. Some other circumstances is they need to renovate the property. In this case, that wasn't the case of why vacancy is up and they're renovating. So this is a great question for the audience. I like these nuanced type of questions. This was a nice comment from somebody. So I get comments across the board. You're literally best to hop around and listen to a ton of people online. Your melodies make the most sense. We provide numbers. What's next questions. We're in the Midwest and our rage delisting numbers are crazy high. Keep up the great work. The rage delistings that we came up with, last November was spot on and exactly what's happening now. So Nina, I appreciate you following the channel and sharing what you're seeing on the ground. Melody is a great friend, somebody to follow. This is Melody Wright, if you haven't heard of her. I started coming on in May of 2025, sharing what I saw in the Jacksonville market. And they started talking about all of Florida because what's happening in Jacksonville is happening all around Florida in various cities and at various price points. And, I gave the conclusion based on my investment banking background. I used to be a real estate investment banker. We're about 31 to 42% overpriced before an investor would come in as a backstop and start purchasing property. The issue that I did with that math is that assumed that rents would stay constant, and rents are actually down 15 to 20%. So I don't know if the investors will actually be there as a backdrop. If you look at the institutional investors, they're actually net sellers at this point outside of the build to rent product. So it's something to keep in mind that narrative is also breaking down that, the investors will swoop in and be able to purchase. We're already down in some areas around my spot. We're down to 10 to 20% from the peak in October of 2022. And we expect prices will continue to slide, basically every single month for the rest of the year. And so I appreciate other people are seeing it now in their markets too, especially in the Midwest, which, is a little bit more steady Eddie. The median income needs to increase from 110K, from 85K to be able to buy a median house of the current market. This will take more than 10 years. So if there's no crash, the home price will be stagnant for 10 to 15 years for the income to grow. That's right. Yeah, everything's relative to affordability in a payment. We live in a payment economy. So if we can get the payments lower, that's why, the administration is so focused. How do we get rates down? But bringing rates down causes inflation, which then it's just like this. Just goes back and forth, right? You try to do one thing and then it pops up something else in the economy over here. It creates a distortion and creates another problem. So, I'm one of the people that, hey, let the market be free, let it self-correct. We'll get to equilibrium at some point. That's going to require some pain. I think that's the best thing. And it'll also allow the next generation to come in and actually be able to purchase an asset that's not at a artificially inflated price that went up 68% within 3 to 4 years, basically, more than a decade of price growth within a short period of time. So we just had all that demand carried forward. We had everything carried forward. And now we're on the back of, hey, we're going into one of the slowest markets ever. So we went from, this is why it feels so weird for people, is we went from one of the strongest markets ever in history, and then we slid right over to one of the weakest markets ever in history. And that kind of is why people are starting to freak out. Sellers it doesn't make sense to them because they don't pay as close of attention as us. The real estate agents are clueless. 90% of them are just going to sit, gobble up whatever information is by these paid media sources and just, spit them out, right? Date the rate, marry the house type of stuff, 3-2-1 buy downs, all this stuff that kind of manipulates the market. It's sad. I hate it. I'm in the industry. I used to be the top agent in my market for the number of sales. I sold 66 homes my first year after quitting my investment banking job. So I understand why the agents do it. They need to make sales. They think this content's good. They don't understand that this stuff is all being manipulated and sold to them by the media. And a lot of it, unfortunately, is not true. And they're misguiding their customers at one of the points where they need the best guidance ever out there in the marketplace. So that's why I'm here. So yes, I think that this is a high likelihood. Either we're going to see wages keep up, which I don't think will happen. I actually think wages could go down for the majority of people because there's going to be job loss due to AI. I think that super productive A players with AI can erase a lot of C players in a lot of organizations, and robots will be able to come in and replace a lot of jobs and as well over the next 5 to 10 years. I'm not optimistic on the job market. I'm not optimistic on the demographic situation that we have here. It's going to be really interesting to see how the government works with business and able to resolve this, because the consumer is 70% of consumption. And the majority of the consumption now, 49% of the consumption is being purchased by the top 10%. So you're seeing, this wealth divide where there's these super wealthy people. The price doesn't even matter. This is like in areas of Miami where they're selling, multi-million-dollar single family house. Like the price doesn't matter. They're still going to sell. The issue is actually that bottom 90% that's not keeping up with all of these changes, not keeping up with the wealth building, the stock market, the values of all these properties. And sadly, that's going to create this great divide that I think is going to happen in the market. This is the person that I said was saving money on the rent. And please send me your success stories if you're listening to this and taking the advice and going out there and doing something, because, it's good to listen for entertainment or for informational purposes so you can make a better decision. But if you actually get a result from the information I'm putting out here, that fills my cup. So please let me know. I'm switching my apartment complex Monday. My current rent is $1,975. My new apartment will be $1,080. And so I talked with this person, and that was just like awesome, because they watched one of the videos. They saw that you can now negotiate on rents, but you can't. It's really hard to do it on lease renewal. So don't do it on the renewal. Just move or threaten to move to another apartment and show them the amount. And if they don't agree to the amount, say, yeah, I'm moving out, move to the other place. So you can negotiate as a renter now, especially here in Florida. They've completely overbuilt for multifamily, especially this luxury multifamily. They're even giving up to 3 to 4 months free rent in our area for you to move in, because they need to fill these units, because net migration is not down to Florida. They need to fill these units to be able to fix their bank financing. So they're willing to cut deals with pretty much anybody if you have good credit, good income, and things like that. One of the commenters at one of the videos said, only 30% off and needs to be 50% off. Look, this stuff is not a science, but I can tell you in the Sun Belt, it's traditionally a boom bust type of market. Okay. And there's lots of charts you can see where it just goes, a lot of people say, well, on average, it goes up 4% every single year, but it doesn't look like this. It's up and down based on what's happening. Well, right now we're at one of the peaks and it's starting to come down a little bit. And so we're in the phase one of a drop. And a lot of people are saying, well, I want to buy right now. Well, it's like, wait, because real estate's an liquid asset. It can take up to 5 to 10 years for this stuff to really play out. And so you need to be careful that you're not buying too soon before his bottom. Now, I'll tell you when I'm buying. You follow this channel. I sold all my stuff. I had over 200 units. I sold all my stuff 22, 23, 24. Because I started to notice that the market was changing. It was great timing. I'm not saying that I'll be able to get that right again in the future, but it was the right thing for me based on what I was seeing. But I'll let you know when I start going back and buying, and there's blood in the streets. Right now, we're not even close to, bottom. And I know there's a lot of people out there saying, oh, we're at bottom. We're at bottom. This is just the beginning. I mean, we haven't even seen the job loss really accelerate yet. You saw the job loss numbers. I mean, the employment is still keeping up. Inflation is peaking its head. And things are slowing down for sure, but this isn't anything of what we're talking about. We're all-time near record highs for the stock market and some other asset classes. This is, it is possible to see 50% decline. I don't think 50% is the right number. I'd be really surprised. I think it's probably going to be somewhere between 30 to 40% from at least in Florida and the Sun Belt areas from the peak in 2022, based on the numbers that I'm seeing and what I'm pushing forward. So anyway, I'm going to stop the share right now, and then I'm going to go through and answer any questions that you might have, and then I'll hang around a little bit. So I appreciate y'all watching. You can also follow me on X. I'm posting content there every 2 hours of stuff that I'm looking at and exploring. It's at Jon Brooks. You can subscribe to my Substack as well. I put out about 1 to 2 articles per week, just summarizing all the data that I'm looking at. So the idea of this channel is, how do I aggregate all the data for people who love real estate, love investing in real estate, love talking about real estate, so you can get a different perspective. Again, I'm an operator on the ground. My company sells 1,700, 1,800 homes per year. I have a title company. We have a mortgage branch. We do basically everything. We see everything all the time. I'm talking with people, just today I had 2 people talk to me about their short sales, an investor who ran out of money on their flips and needs to raise capital to be able to pay their monthly, mortgage bills that are a couple days old. And, some agents that are looking for leads because the lead funnel that they had ran out of leads because of the net migration basically has slowed down to zero, and that's impacting their business. So I'm constantly in it, talking to the top people in the industry. I talk with analysts around the country. So I'm getting all these perspectives. I'm putting them together. I'm looking at my favorite charts. And I've been studying real estate since 2010, which is a really great time to actually start studying real estate. And I love it. So, that with the real estate investment banking, with being a top real estate agent, being a top, and being an investor, buying a bunch of real estate, operating a bunch of real estate, I feel like gives me a unique view versus these ivory tower players that are out there they've never done it in real estate. They never sold it. They don't understand it. They've never managed it and see these issues that actually happen on the ground. That's why I think that, the perspective that I'm sharing here is a little bit different than what some other people might think. And that's fine. I think you want a variety of people's perspectives. I am friends with tons of housing bulls, and we like to debate, and we put one of those debates out there. There's a lot of people who really still think that the market's going to be doing fantastic over the next decade. Every indicator that I track, there's not a single positive one, except for mortgage rates were coming down recently, and then they popped right back up above 6. There's only one that I'll tell you when the good data comes out. I will tell you when that's happening. When the market is at bottom, I'll tell you that I think it hits bottom, and you make the decision for yourself. I'm not telling you what to do, but I appreciate you watching and following along. And with that, I'll stop the screen there and open it up for questions with the group. So I'm going to scroll up about the kids. That all that is true about the kids. Yeah, I can't tell you how many people in their 30s are just opting out of having kids because they say it's too unaffordable. And my perspective is that's bad for society. There's some people out there that argue with me that that's a good thing for society. I'll let you guys be the judge of that. It's hard to explain to people all the reasons why not having kids and opting out for economic reasons is a bad thing. But we won't need to get into that here. You guys can talk about that offline. I'm in the higher band of single family homes in Chicago. Even at this level, my neighbors couldn't afford to move here to today's prices, 25% too high. Exactly. So one of the things we're advising our agents to do with their sellers is to run the numbers on their house today at today's rate, and then show them the rental amount for the same house, and then ask them, why would somebody buy your house when they can rent it for $1,000, $1,500 less? And then they start to understand, the market's that different. And by the way, rents are falling. Okay. And your neighbor down the street already cut their price. So you're going to need to get actually lower than them. You need to be the best priced house in the best condition in your neighborhood to have a chance to attract the best buyers. Now, if you price your house correctly and it's in great condition, it will sell. It will sell. The issue is the majority of these houses, they need, $30,000, $40,000, $50,000 worth of repairs, even in the mid price points, to be able to get where they can actually sell for the price that seller wants. And it's hard to tell a seller, hey, you need to put $50K in this and you need to remodel it for 2 months if you want that price, or you're going to have to reduce the price of this and let the next person come in. Because these next wave of home buyers, if they're, young families or couples with dual incomes, that's usually who it is. They don't have cash or 2 months to be able to renovate the house. Okay. So you need to cut the price. So the majority of the time, we keep saying it's the price, it's the price, it's the price. Cut the price first and get people to the house. Now, Zillow Showcase, we use that for our agents to market their listings. It has a phenomenal tool in there where you can actually toggle the price and see how many more buyers it would bring back into the market based on their algorithm, based on what they're seeing on current market data. And I think it's a really valuable tool that our agents have. Again, if you need to reach out to us and get access to these type of information, you have a house to sell, you even are thinking about short sale, we can help you with short sale. We know short sale experts in Florida and Georgia. Reach out to us. We're happy to get you in touch with the right people so we can help you find solutions. Let's keep going. So I'm a buyer. I have money. It doesn't make sense at this price. Yes, you need to be careful. You don't want to be buying at the peak of the market. And I know people say, well, if you hold it for 30 years, it doesn't matter because the house will be paid off. Well, it really does matter, the price that you purchase the property for and the terms that you get for the house. most people only stay in their house 8 to 12 years. 8 to 12 years, your house is not being paid down enough. And the majority of the money that you've paid to the bank is an interest and it's not principal. So, I think a lot of people get confused. The other factor is, Chris, is that it's 10% round trip to sell buy and sell a house, right? Because you're paying the realtors on the way in, you're paying the closing costs when you're selling it, you're paying the realtors again, you're paying the closing costs. And so you got to calculate in 10% right off the bat. It's like when you buy a car and you drive it off the lot and it's worth 10% less. It's the same thing when you buy a house. So you need to expect that, these prices, will go up at least 10% in the next decade. And because that's the average time that somebody stays in the house. I get it. If you want to stay in the house for 30 years, it's great. The majority of people do not stay in their house that long. How much do you think the Nocatee, Jacksonville area will come down in the next year or so? So Nocatee, so Sacred Kitties. I hope you're in Nocatee. Maybe you're a realtor who follows the channel. I appreciate the question. Great question. Nocatee is a very interesting market. A lot of wealthy people move there. However, there's also a lot of people that went down there and bought with FHA loans and VA loans from 2022 to 2025. Now, about 25% of originations occurred from 2022 to 2025. So in Nocatee, the people who concern me are the people who, had that high leverage, purchased during those vintage years. Those folks, if they lose their job or have to relocate or something happens, instantly it's going to be a short sale. And we're already starting to see them. We opened a property management company in 2024 because we had people reaching out from Nocatee saying, I bought my house 2 years ago. I need to sell it and it's underwater. And so I need to rent it. And so we're like, oh, we'll rent brand new properties. They're really hard to rent because there's just so much inventory coming on. There's phase 2, phase 3, phase 4. The rental amounts are pretty high. People at that price point, they think the American dream is to buy instead of rent. So they're not doing the math. So we're seeing this transition period. That to say, I'm not sure on Nocatee because it is unique and there's a lot of wealth there. And it's harder to get people who have wealth to have the distress where you're going to see those type of rapid declines, if that makes sense. Again, there's like 3 different markets in the housing market. There's like the uber wealthy who they don't care about the price. That's not why they're buying. They're just like, they just buy. They have money and they just buy things. Okay. So that's not who we're talking about. The middle class between, 400, 300,000, 350, depends on where you are, up to 800,000. That's the segment that's getting hurt the hardest because those are the people that are experiencing the job loss. Those are the people that are getting maximum leverage on their loans, their VA, FHA loans, and this type of stuff. And I think that will cause an issue for Nocatee. We're starting to see some short sales pop up there. So I think it's hard to say. I think I kind of lumped them in with Jacksonville, where it's very possible to see a 30% decline. They are overbuilding like crazy in those areas, and people are already starting to complain about the traffic and some local issues. So I think it's a great place to live. I almost considered moving to Nocatee, and I think it is a great place. It is a great place to be, but you do need to be careful on the price and the terms that you have. You need to watch what the builders are doing because they are continuing to build. A rotted single wide I turned down 2016. Is it now 275? Yeah, price appreciation is just crazy. Well, you are a rare one, Chris. So it makes sense. In the immortal words of Jerry Jones, "Let your money get mad." Rage quitters are going to learn a lesson when they relist. Yes, they are, and they are cutting the price. So we are seeing that the sellers that relisted the house are cutting the price and are getting realistic, which is good. It took about 6 to 8 months for sellers to really get it in their head that their house is no longer worth what they thought it was. Why? Because real estate is priced on the margin. It's the next buyer versus the next seller, and that determines the next price. It's not like all this equity is real. It's not real until it's capitalized on. It's evaporating very rapidly right now in certain areas. All that matters is the next buyer and the next seller. So now that we have a ton of sellers coming on and we don't have the next buyers, obviously there's going to be a massive disconnect between those two. And so only new construction is selling here. Most existing homes go on the market and they sit until they quit. That's what's happening here too, because the new construction is buying down rates into the 4s. They're slashing prices. They're buying incentives. They're saying, we'll pay off your CDD fees. We'll pay your HOA fees 2 years in advance. They're giving away golf carts. I mean, if they're giving away golf carts, the house is overpriced. But it's because the new construction has to get, and they have the ability to sell because they're building these things and making 25, 30% margins on these houses. So they have room to cut, and they're using a lot of the money in that margin to be able to buy down the interest rate in pools. They buy gigantic pools of money from banks at lower rates, and then they hand them out. And that's the way that they do it. And that's how they're able to get the economies of scale for it. So we see people. I love Melody. I love Melody too. I'm actually believe I'm meeting with her in a week or two in person. I offered 15% below list last year and was rejected. The seller rage quit, but just reached out a year later to reopen talks. What should you offer now? I'd go another 15%, Chris. Keep pushing them. Keep pushing them. Obviously, there's going to be a point where you're going to say, "Hey, the price makes sense now. I should absolutely buy it versus renting," and that's the case. So let's see. We have been here before. Credit card and car loans are already in serious trouble. Yeah, car loan repos are at the highest level. Credit card delinquency is high. Don't forget student loans, CC. It's definitely there. Punta Gorda is down 26% from the peak. When can we hope for the same here in Orlando? Orlando is seeing problems. So I have a lot of friends in Orlando who are big in real estate investing. They're seeing rents come down. They're seeing prices come down. And I think we're going to continue to see problems. They also have a lot of insurance problems there, surprisingly, because they're in the middle of the state. Doesn't really make a lot of sense, but we're seeing things all across the board. So who is this? Somebody sent me $2 and said, I need a SFR for my new family. Thanks for sending some money. I didn't even know you could do that. Whoever that is, just email me and movewithmomentum.com. I'd love to hear from you guys. If you need help with anything, I respond, no joke. I respond to every email. I don't ask for anything. I'm just here to share what I know with other people. That's why I got into this business. And that's why it's served me so well, because people keep coming back, and refer me people. So look, if you need help with anything, you need help with rent, negotiating rent, you need to do an analysis on your house, you want a second opinion, you need to go through a short sale process, you need to look at your options, let me know. But definitely the best way to do that is to email me. Do not call me. If you find my number it does not go to me anyway. So do not call me. Definitely email me. Jacksonville here in Bartram, they're sitting to sell townhomes for $350 that sold for. So Neon Jaguar, first off, go Jags. It's awesome. But Bartram is, it has its unique challenges, but the townhomes and condos are building up and they're very difficult. There's a lot of deferred maintenance on these. If you actually look at their balance sheets of the associations, they do not do well. There's special assessments that are happening. There's deferred maintenance. And so these condos and townhomes are extremely hard to buy. I do not like owning them. I've owned condos before and I try to get out of them as soon as possible. If it's a flip, it's not something I want to buy and hold forever because there's so many issues that can go on with them. I definitely prefer as an investment. If I'm going to buy an investment, it's going to be a single family home. And I think for most people, it makes sense to buy a 3-2 versus trying to buy a townhouse, especially for $350. I get the appeal. You're close to people. It's walkability, all these other factors, but they just do not perform in downturns. And I feel that we're about to head into a larger downturn, even from where we are right now. So if nobody has any other questions, hey, Michael, if you have a question on real estate, drop it below. But anybody has any questions, I can hang out here for another couple minutes. And my goal is with this channel, I'm going to release one video probably on Tuesday or Wednesday with all the economic updates that I've reviewed for the past week with my insights on them. And then probably do either a Thursday or Friday live, just like this one, because I love chatting with you guys, answering the questions and seeing how I can help. So if you want, and then again, you can reach out. So if, in between there, this is what I do full time. I lead about 270 plus real estate agents in the Northeast Florida and Georgia areas. And they go out there and sell every single week. And I just started this channel back in May 2025 to see what I was sharing on the ground, because nobody else is sharing what's actually happening in the marketplace right now. And I felt that was not a good thing for the consumer to not have other, a different perspective that you could listen to that would help you become a better negotiator and realize where we are in the market cycle. And that's always been important to me. I didn't grow up wealthy or anything like that. I've always looked out for the little guy. And I feel like I hate to see that first time home buyer come in with an FHA loan at this point in the market, buy a new construction house at this price. And then if they lose their job 2 years later, they're starting off their entire life with either a bankruptcy and a foreclosure. And I hate to see it. And if they watch a channel like this, maybe they could realize, let me negotiate a little bit more. Let me get a little bit more cushion. Maybe I should rent for a year and wait. Maybe I should think about this a little bit differently. And that's the whole point of the channel. Think big, question everything, is to question the narratives that the media have been putting out there, which the agents don't even know that again, people don't know that all this stuff is bought and paid for. Most of the media out there is just straight up from some industry group telling them to write this article to get this outcome that they want. And I think you need to really dig into, when you even see that 4 million shortage, I think there's a housing shortage, or there was one that was all the way up to, I think it was the National Association of Realtors, like 7 million housing shortage. go look at their assumptions that they use on those models and see how real they are before you just accept this information as like, oh, I got to get a house quickly because we're running out of houses and there's going to be a shortage for a long time and it's going to be a higher price later. You got to look into the data a little bit deeper than just the headline, because the headlines can be very misleading. All right, got a couple more questions. Bambi Lee 111. Do you think 1,500 square feet of unfinished basement is a reason to keep the price raised on a house? Bambi, where are you located, first off? Because we don't have basements in Florida. You know, I grew up in Virginia. We had basements there. North Carolina, they had basements there. Unfinished basement is a reason to keep the price. Yeah, I needed more information on that. John, this Tuesday was tax sales from many counties here in Texas. The quantity of properties is so high. My neighboring county had about 25 go up for auction. Yes. So one of my friends, Aaron Amucha Staggy, he actually sells the foreclosure and tax sales data. And he's like, he's getting he has a ton of foreclosures that are happening in Texas across the board, which is crazy to see. This stuff usually actually takes like another year or two to play out. I think we're going to start to see in Florida, foreclosures are moving up, short sales are moving up for sure. It's going to take another year or two for this to really play out with the foreclosures, because we had all these pent up foreclosures that were through workout programs that got extended all the way until October of last year. And now it's a little bit more difficult to jump through those hoops. So I think a lot of those that we basically have like 4 to 5 years of foreclosure inventory that never came to market, that we're going to see come to market over the next year or two. Now, Florida is a judicial state, so everything has to go through the courts. So it takes time. It takes time for this to go through. The realtor for the home said they priced it higher because of the basement, but it's not finished, needs a lot of work. Yeah. Okay. So Bambi Lee 111, realtors will say anything. That's literally their job. They'll say anything for their client to make the price higher. So, you know, I actually think, you know, unfinished basement is great if it's relative to other properties that do not have unfinished basements and you're comparing it that way. At the end of the day, you have to decide what the value is to you, not what the realtor on the other side of the transaction says why it is. Most realtors, they literally live paycheck to pay their mortgage. They're not paying attention. They're just trying to say anything to make the deal go through. You need to listen to yourself. You might need to get a buyer agent yourself to be able to analyze that for you. Hey, is this true what this person is saying? Maybe it is true. I don't know. But I'm just saying most realtors will say whatever they need to do to make the sale happen. And that's unfortunate. They won't be able to sell in 2 years, job loss or not. All right. I had 3 distressed sellers. My realtor fired me today. Mike, why'd your realtor fire you? You shouldn't be getting fire. You know, I would fire about 10% of my customers because either they were rude, they would threaten to sue, they would call me drinking. I mean, the stories that I have from people, you know, even $1 million customers, I would fire because we call it curbing. We just need to curb about 10% of people who do not fit. If you're going to make our life miserable, we do not want to work with you. I want really good clients who are qualified and are going to work with me. It doesn't even matter the price point. I just want like good people who are grateful for the services, and I'll do it. I'll go across the world to make those people happy. But if you have like really unhappy customers that are constantly annoying you, in a bad way, not like to get the deal done, but just like being difficult to work with, being extremely emotionally all over the place. So those are not the type of people for me. But every agent gets to work and decide who they want to work with. We don't have to take everybody. And I would deny about 10% of the people that would work with us. So square foot house, that much of a basement. All right, guys, it's been 48 minutes. Thanks for hanging with me. Again, if you have questions, I'm going to drop my email in the chat. Happy to connect with you. Thanks for watching. And that's what's going on. If you liked it, drop me a like. You know, I am trying to make the YouTube channel and my X account have a larger following so I can make more impact to get the word out of what's actually going on in the ground. So I appreciate you guys watching and making it happen. Thanks so much.